Hello, welcome to the European Open briefing for Friday, January the 27th. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing the US dollar making a bit of a comeback this morning. It's risen above the 115 yen level. That's mainly due to the rising differentials in US and Japanese government bond yields. There's still some uncertainty surrounding Trump's trade policies, and that's hurting the Mexican peso. We had statements yesterday from Trump who wants to impose a 20% tariff on Mexican imports. In other currencies, the pound it appears to be heading lower for a second day now, and it's moving further away from its recent 6 weeks highs, and that's mainly due to investor caution ahead of Prime Minister May's meeting with the US President later today, where they will likely discuss forging a new trade deal between the UK and the US. If you look at Asian currencies, the Australian and New Zealand dollars, there's appear to be changing direction. The Aussie looks like it will end the week down, and that would make it its first weekly loss in 2017. The Kiwi, on the other hand, looks like it will end fourth week higher against the US dollar, despite the dollar's recovery this week. In commodities, oil is at 3 weeks highs, and well, there's no particular reason. It's just growing confidence that the oil-producing nations that agreed to that OPEC, non-OPEC deal, so far they appear to be complying with the terms of the agreement. So let's begin with the dollar-yen pair. We can see the dollar has been steadily climbing since yesterday. It's currently just above the 115 level. It earlier today it hit a high of 115.30 yen. That's a 1 week high. We had some intervention in the bond markets by the Bank of Japan. They announced that they are increasing the purchases of 5 to 10-year Japanese government bonds, and that's pushed down the yield on the JGBs. In contrast, US Treasury yields are going up, and that's mainly on expectations of higher growth in the United States, which would in turn lead to higher interest rates in the US. The market sentiment is shifting against the US dollar. If you remember earlier in the week, sentiment was fairly negative because of concerns of negative impact on protectionist trade policies on the US economy. Now investors are becoming more optimistic because based on what Donald Trump has been doing this week, he is pretty much sticking to his election pledges, and therefore investors are saying it's only a matter of time before Trump announces increased infrastructure spending and lower taxes and so on. And the dollar index also was mentioning that hit a 1 week high today. So the dollar's rebound is against all major currencies and not just against the yen. If you look at the Mexican peso, we can see the Mexican peso has been weakening since midday yesterday. There's rising tensions between Mexico and the US. The Mexican president was due to visit the US next week for a meeting with Trump. That meeting has been cancelled after Donald Trump said that the Mexican president shouldn't. Well, he basically said there's no point in having a meeting if Mexico isn't willing to pay for the planned wall on the Mexican-US border. So that's hurting the Mexican peso. Although the Mexican peso is still some distance away from its record lows. Moving on to the UK pound, now we can see the pound, it did hit a 6-week high of just under the $1.27 level. It's since drifted lower, currently trading around 1.2540. There's a bit more cautious now in the markets as far as the UK is concerned. We already had those Brexit developments in terms of the Supreme Court case, and we also had that GDP data where UK growth was above expectations in the fourth quarter. So now that that's out of the way, now attention is moving on to May's and Trump's meeting. So investors will be looking to see the likelihood of having a quick deal with the United States. If there is a quick deal between the two countries, it will likely lead to, well, it will basically improve the UK's chances of signing similar deals with other nations, and that would have, of course, a positive longer-term impact on the UK economy. Let's move on to the Australian and New Zealand dollars now. It's been interesting because both currencies have been doing rather well against the US dollar since the start of 2017. The Aussie had a 3-week run of gains against the US dollar, but this week it's set to end lower against the US currency, and that's mainly due to the weaker than expected inflation data out of Australia this week, which pretty much puts the prospect of further rate cuts still on the table. So that will likely weigh on the Aussie, could weigh on the Aussie in the coming months. The New Zealand dollar, on the other hand, they had better than expected inflation, and it's now looking less likely that the Reserve Bank of New Zealand would cut rates. So the Kiwi is looks set to have another week of gains against the US dollar, giving it a good monthly increase against the US dollar. That's a very positive start to the new year. Before we go, let's have a quick look at commodities. Gold has been steadily falling this week. It's currently at 2-week lows, around $1,180, and that, of course, is due to the stronger dollar, and which is mainly down to higher US Treasury yields. So there's, of course, an inverse relationship between the dollar and US Treasuries and gold. Oil, on the other hand, is finally appearing to be breaking out of its recent tight range. It did climb to 3-week highs yesterday, and it appears to be holding around those levels today. It's just below the $54 level. And there's no particular reason for that, even though we are seeing signs of rising US production. But initially, the oil prices were subdued because of doubts about the compliance or about that OPEC non-OPEC deal. But those doubts are now appearing, so that's supporting oil prices higher. Let's look at today's economic calendar now. We had Japanese inflation data, which came in above expectations, surprisingly. Japanese core inflation, which is what the Bank of Japan targets, came in at minus 0.2% in December, slightly better than forecast of minus 0.3%. Although, even though inflation does appear to be on the up, it's unlikely that the Bank of Japan will make any changes to its policy in the near future, so that had little impact on the markets. We also had producer prices out of Australia. We saw producer prices firm slightly in the fourth quarter, and export prices were also up, although the Kiwi wasn't. Again, we had little reaction in the currency markets to that data. In Europe, we did have German import prices which beat expectations, so that's an indication that price pressures in the Eurozone are steadily building up. We're going to have a fairly busy US session. We've got durable goods data for December, and of course, more importantly, we do have the first preliminary estimates of fourth quarter GDP in the United States. It's expected to slow from 3.5% to 2.2%. Of course, any deviations from that would likely lead to some fluctuations in the dollar. That's it from me. Thank you very much for watching, and have a great day.